Hey, welcome Fidelity Fortune Hunters. This is our continuing series of videos on how to use the Active Trader Pro system. I've gotten lots of good feedback about previous videos and we're very appreciative of that. One of the comments has been, though, it's one thing to look at the left-hand side of the chart and try to describe what's happened in the past, but what do we do about predicting the future? In other videos, we've also discussed the Fibonacci drawing tool and how the Fidelity version of that is really kind of limited. And I'd like to get into that in some depth this morning. It's the 20th of September, 2021. And you can see on this Amazon chart, it's the morning that we had a serious drop-off in the averages and in Amazon itself on a Monday morning. So if this whole issue is of interest to you and how to predict the future a little bit and also what we might glean from the issue of this drop off in the market, hold on to your hat because we'll get started in just a second. Hello again. As most of you know who have seen previous videos, we typically focus mostly on the Forex market. And our channel was originally developed back in 2016 to create illustration videos. By that I mean in our book, The Zealander Fly Trap Forex Trading System, we got involved in using the video medium here to describe further what we'd been discussing in our book. But over time, because many of us have IRAs with Fidelity and there was very little about the Active Trader Pro platform, we decided we'd try to do a few videos at least to discuss how to use the platform. It is not the best explained out there, and there are a lot of limitations, and you have to know how to do some workarounds. So in this video, what we'll do is quickly, for those of you who've never watched a video here, go over some of the issues that we discussed before, how to move around the chart and so forth, and some of the oddities of it. And we're going to drill down on the issue of the Fibonacci drawing tool. So without further ado, let me just describe that this is the Amazon chart. It is, for the purposes of just this picture, a 39-minute chart. That divides the market up into 10 equal sessions, the day session that is, into 10 equal parts. So there are 10 candles for every day session. And the first thing we can do here is make this Amazon chart a little easier to read by creasing this over here. Those of you who don't know about the history tool, simply hit this down arrow here either to hide it or to expose it, and then you can simply move around the chart quite easily. Notice here we can go backwards in time and so forth. It's really the easiest way to move around your chart. Now what we can also do here, as many of you know, is to widen things by grabbing these lines, and it's difficult to see on the video perhaps, but you can experiment with that yourself. Get your double arrow tool, left click and hold and move things around. You can also adjust your margins in the same way. So what I'm doing here is left click, hold, and then moving about. Now what's happened on this 39-minute chart is that we had an up move, a little bit of an up move on Friday. We've used our 6 and our 12 EMAs here, and we also have a Wells Wilder, and I turned that to a 24 kind of as our fail-safe mechanism. You can see here that as we twist and turn, this is a pretty good indicator on this 39-minute chart of what you're doing if you're day trading a stock. Now, what were we to think about Friday's action? Well, we did pull down, see, below the Wilder 24. We had a crossover of our moving averages, and so we were really kind of in a position where we didn't want to be taking any long trades. Now, I'm not suggesting you should take an over-the-weekend trade, but I do want to use this as an opportunity to show you what targets you might be looking for as you begin to use the Fibonacci drawing tool. Now, let's back up in time first of all so I can show you a different kind of a situation here. Let's see, where are we here? We want to go here, I think. Yes. Notice that what we could do here with the drawing tool is left click. Here's your Fibonacci retracement tool, and we would get into this position and pull down and go from top to bottom. Now the tool works very well in the retracement mode. In other words, if you're coming back up, you can see this move to the north is something that you could clearly position on your screen. Now let me show you how it works. First of all, you click, sorry, I'll go back again. You click on a dot, because one of the weaknesses I think in the tool is that you can't have default colors. You always have to go back and play around with it. So I clicked on one of the dots. Now I can change this and make it yellow so it stands out for me. I don't like the 23.6 in terms of values, so I remove that typically. And then I might add a 127 and or a 1618, and in this particular case we don't have decimal points, just 127. Click add value, and you can snap to price if you want. That's easy. Apply. Now notice that when we snap to price that we did get the best situation possible. Notice that on this up move on the 39-minute chart we did hit the 127. We were rejected twice, and then we came down into this area, and then notice this crossover here, and we came back down to the original zero line on that particular move. Okay, so let's get rid of that for the time being. We're going to simply remove this one. That was an illustration. The idea being that when you have a downward thrust like this and a move higher, the Fibonacci tool is designed to help you figure out what levels up in this neck of the woods you might want to add to your chart, whether it be the 127 or the 1618, for example, which would be up here as targets for you. Okay, now once again, you can do this on any time frame. I use a 195 minute a lot. This, as I said, was just for illustrative purposes using the 39-minute, which is mostly an intraday or couple or 3-day kind of a pattern tracer. And maybe you'd use it if you were trying to figure out what to do about weekly options. For example, if you wanted to get into an option on Tuesday or Wednesday and see what happens. This would be a time frame that you might use for that kind of overnight or over 2-night scalp. Okay, now we're moving back over into the area where we wanted to be clear about what to do. Now notice that if we were to take this and move it over a little bit further, I don't want to do it quite that way, move back this way. If we wanted to say, okay, here was another lovely kind of move to the downside, we'll go back to our drawing tools. This was a move that we could play with right here, and you have to be careful when you're at that high watermark on the chart that you don't get it confused. Notice again we have to change our purple into yellow in order to get back on track with something we can actually look at. I'll get rid of my 2360, and this will become easy for you as you do it multiple times. We want to snap to price, and we would like to potentially add the 127. Okay, here we go. We're going to snap to price by moving this here. Notice that when we came back to the 618 on the retracements, then we failed. We could not get up through this area last week. And in fact, even Amazon was quite weak, although this was the end of day kind of Friday activity, it began to fall off again. There is no way with this drawing tool to add a negative number in this block here, and it would take a negative number to come down into this area and get what are called the Fibonacci extensions. So I thought of a way to have a bit of a workaround, and I'd like to show you that now. And people have offered multiple workarounds in the comments area, but this is the one that makes it easiest for me because I have to think through all of the math terms every time I do it. So let me come over here to this area, and we're going to pull up our spreadsheet. Hang on one second, and I'm going to get it for you. Okay, I have my spreadsheet ready, but first of all, let me show you on the chart what we're trying to do with our math calculations. Because we cannot go back up here, we're obviously headed in the wrong direction. Our drawing tool isn't going to automatically tell us what our values might be down here for a line. That's not true in any of the other platforms that I'm aware of, but it's just an annoying issue with Fidelity. Anyway, this is the top level number 3549, and down here we had 3402. So let me pull this up and show you. 3549 is the zero line in this case, even though it's higher than the other line. Then 100% of the move is 3402.79, and I simply added those values. Those are just values that are plugged in. The distance traveled then comes out to be almost 150 bucks, and that's simply by subtracting this number from that number. And then over here I've added our 127 extension and our 1618 extension, and in this case, for the formula, we have to add the decimal points, even though that's not what happens on the chart itself. Now, when we multiply 127 times the distance traveled, we get 186.56, and that would be then subtracted from the top line in order to get 33.63, which is down here $186 lower. Likewise, with the 1618, we have $237 would be that move if we continue to the downside to a new target. Okay, 33.63.13, let's remember that number, and we're going to go here to our drawing tool, and we're going to come here and click on the chart. And now I'm going to change this and make it orange as our first kind of stopping point. We don't mind the line style, but I would like to make it a little thicker so it's easy to see. And now we come back here and we go 33.63. We'll dispense with the decimal points for the time being. Okay, and so now what we have right here, you can see this is the target that we came to almost to the tick, and in our second 39-minute candle, this was the opening candle, down, 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 and then with a gap down, and then we had this move down here to the exact tick on the chart, the 33.63. We had a dead cat bounce off that level. You can see, we'll open it up so you can see it even more clearly. Little dead cat bounce here, and now we've come down to challenge this level again. Okay, now back to our spreadsheet. Let's see what we added there next. 3312. It's operator memory is the problem here, guys. 3312, so we don't forget it. Okay, we come back here, draw the tool, and I'm going to make this one red, and we're going to make it 3312. I think that's what we said, right? Okay, so we'll just get rid of these odd decimal points and plug that baby in, and there we go. And so our eventual target, if we can't move higher and cross back over to head higher, we'd want all of these to cross over again before we took that long trade. Otherwise, we're in a counter trend trade, which doesn't happen to be very helpful most of the time. This is weakening, continuing to weaken. It may not happen today, but probably if this downturn continues, we'd be in a position to have this as a target. What I would like to see from a trading point of view, though, is a pullback to at least challenge the 6 EMA on this chart in a short-term time frame. Before getting involved, we could have that pullback at any time, really. This is a little difficult now. This would have been the place to maybe take a chance on this draft down over the weekend, given the indications that we weren't making any progress on triple witching hour on Friday. One last thing here for you is that I would also suggest, especially on a 39-minute chart, that your shorter time frames often also take you to the 200% as opposed to 1618. And bottom line, that would be just another column on our spreadsheet, which we could put on easily. And over here, it would be 2, very simply 2, and that would do our calculations down in this area. you'd see 1.27, 1618, and then twice the value of that original move. So from here down, so it'd be double the 146 that we had on our spreadsheet to get down into the 200 level down here. So I hope that's a useful workaround for you. Typically, even on a 39-minute chart or over the weekend, there's a chance for you to create these calculations with a spreadsheet quite easily. This 39-minute time frame, is, if I haven't mentioned it before, is pretty good for weekly options kinds of trades, a couple nights to see what's happening. As I mentioned before, I think 39 minutes is 10 candles per day session, so it gives you a pretty fine-tuned view of what's likely to happen next. I hope that helps with your trading. Please subscribe if you would. Get us up over 1,000 subscribers in Forex and Fidelity Active Trader Pro. Don't hesitate to leave a comment. Hit the bell next to the subscription if you'd like an alert when we post new material. And most of all, thanks for giving us your time and a good watch here on YouTube. Have a great day.